Hi, this is Sarah from an accountancy, and today I want to share with you how you can get £18,570 worth of income without paying a single penny of tax. Does that sound too good to be true? Well, actually, I'm afraid it's not a get-rich-quick scheme. It's actually something much more simple and straightforward, and it's all about tax on interest in your savings. Let's have a little bit of a look with that and play with the figures, and I'll explain to you how I get to that 18,570, and we'll go from there, shall we? So most people can actually earn some interest income without paying any tax whatsoever. It does depend how you remunerate yourself, and given the fact that interest rates have gone up dramatically in the last number of months, then there may be some people that are paying tax on that interest income who maybe don't have to if you're able to switch things around a bit. So this might be particularly beneficial if you own your own limited company, for example, and you can choose to maybe remunerate yourself by a lower level of salaried income and higher dividends. But I'll come back to that in just a moment. So there are three allowances that we need to consider whenever we're looking at tax on interest income. The first of those is your personal allowance. So everybody has a personal allowance of £12,570 per year on which they pay no income tax. Now, when I say everybody has that allowance, actually, once you go into additional rate earnings and you get to a certain level of income, your personal allowance starts being reduced. But we've got that in a different video and I'll not go into the details now. Basic rate, high rate taxpayers have a personal allowance of £12,570 on which they pay no income tax at all. So that personal allowance gets used by income from wages, pensions, interest and other income tax subject income. So on top of that, then you have a starter rate for savings. So this is something that doesn't get talked about very often. And this is the starter rate band for savings is up to £5,000 per annum. Now, that is only applicable up to a maximum income of £17,570. So I'll explain that in a bit more detail in a few moments. But first, let's look at the third allowance. So the third allowance is your personal savings allowance, and that varies dependent on whether you're a basic rate, a higher rate, or an additional rate taxpayer. So for basic rate taxpayers, you've got a personal savings allowance of £1,000 per annum. For higher rate taxpayers, you've got a personal savings allowance of £500 per annum. And unfortunately, if you're an additional rate taxpayer, you don't get any allowance for income on interest from your savings. Let's look at a bit of a worked example to try to explain this a little bit better. So let's say that you've got wages of £16,000 per annum and you've got interest income of £2,000 per annum. So we need to look at the personal allowance and the wages. So you've got more wages than your personal allowance. So let's take that 16,000 minus your personal allowance, and that leaves you with £3,430. So that has to be subtracted from that starting rate for savings in order to see how much of that starting rate band you've got left for your interest. So that gives you £1,570 left, but you've got £2,000 of interest. So you can utilise that starting rate band for the £1,570 worth of interest, and then you've got that £430. So assuming you are a basic rate taxpayer, and actually even if you're a higher rate taxpayer, that's when your personal savings allowance kicks in. So you can utilise for basic rate taxpayer that £1,000 of your personal savings allowance band to offset that £430 excess that you've got. Likewise, even if you were up as a higher rate taxpayer, you've got £500 of excess, so you will still have all of that £2,000 worth of interest income absolutely tax-free. Does that make sense? I hope it does. Okay, so there's a couple of other things to consider. If you have joint accounts, then the interest from those joint accounts is split 50-50, regardless of who's put more in, who puts less in, it's just split 50-50. And if your income interest goes over those various tax bands that we've just looked at, well, then you get taxed on that interest income at your highest rate. So, and highest rate of income tax. So 20% for basic rate taxpayers, 40% for higher rate taxpayers, 45% for additional rate taxpayers. So it does take a fair whack out of it. What you need to consider about reporting then, so if you do not complete a self-assessment tax return, and if you're a basic rate taxpayer and you have your only income through salary or pension, for example, then your tax code will be updated by HMRC, and they will take any payments that are due automatically. You also won't be required to file a self-assessment tax return. Your bank or building society will automatically report your interest income to HMRC, so you don't need to do anything, but you may see a bit of an adjustment in your tax code. If you complete your self-assessment tax return, you will know the appropriate boxes to fill in the interest income, and do be mindful that, again, your banks and building societies will be reporting that to HMRC anyway. And final note on that, I think, is that should you currently not need to do a self-assessment tax return and your income from interest on savings or investments is greater than £10,000 in any year, that regardless of whether there's any tax to pay or not, you will have to register for self-assessment and file a self-assessment tax return each year. So I hope that makes sense. I'm sure there will be a few questions around that one because it's quite complex. And as ever, any questions, drop them in the comments, give us a buzz, drop us an email, and we'll be happy to help in any way we can. Thank you, and bye for now.